Hey everybody, Chuck Barone. Wednesday, May the 31st, 2023. Last day of May, we're rounding into the summer here. And the last month of the second quarter. Fascinating day today, guys. A lot of interesting stuff to talk about. Before we get rolling, though, let me welcome everybody to the show. We appreciate your guys' support. We appreciate you being here, watching these videos every day, and all you guys do to support us. Couldn't do it without you guys. All right, so let's look at these markets today, guys. Wow. So we know we got a lot of data coming at the end of the week that's going to move these markets. At the same time, we have all kind of interesting stuff going on today, but the market's not really reacting much to what's happening today, just a little bit. So let's look at this. So the stock market today, down day, but not in a big way, nothing catastrophic. The Dow down 134 points, 32,908. S&P down 25 at 4179. The NASDAQ down 82 points, 12,935. So a down day, but not any drama. I think bonds, or not bonds, but the banking stuff today, we'll talk about later, spooking the markets a little bit. This bank stuff isn't over, guys, so we'll see where it goes. Bonds today, schizo situation, of course. Bonds, basically rallying today. So yesterday's sellers were today's buyers, go figure. Yields falling. The 10-year down 6 basis points, sitting at 3.64%. The 2-year down 7 basis points at 4.40%. The bond market is usually like where the boredom happens on Wall Street. There's usually not a lot of drama, not a lot of whipsawing around of rates like we're seeing here with this stuff. It's just crazy, guys. I mean, so what happens one day gets erased the next. It's just a lot of running on a treadmill. A whole bunch of activity and not a lot of miles, not a lot of forward progress, right? The dollar today up small, but still a good strong number for the dollar, 104.23 on the index. Not a lot of news there, but the dollar still looking very strong. Metals today, in spite of that strong dollar, having an up day, a small up day. Gold gaining $3.40, $1,962.70 for an ounce of gold. Silver up 34 cents, $23.50 for an ounce of silver. Metals holding on, in spite of this strong gaining dollar. Metals holding pretty lofty numbers. I think there's still plenty of room to go in this rally. Once the dollar starts coming back down to earth, which it inevitably will, we're going to see a nice rally in gold and silver. Oil today down again, down $1.50 per barrel for a West Texas Intermediate, settling at $67.96 per barrel. Don't take a lot of, don't think there's really much happening here, because there isn't. It's below we've been telling you guys, it wants to trade between 70 and 75. It'll break out for a few days above, get right back into the trough, stay there, break out underneath, stay there for a few days, expected to get right back into that trough. Bitcoin down today, down $745, $27,055 for Bitcoin. Still holding strong, I think. In spite of all the fluctuations in the market and the gyrations of the debt ceiling and inflation and recession or no recession, and what about the rest of the world? And Bitcoin hanging on, doing good. So let's look at these news you guys need today. I don't know if a lot of you guys have been following it, but I know you guys are pretty astute, most of you watching this show. Have you read about this SPAC disaster here? Most of you guys know. SPACs were super hot. About a year ago, I guess, was Special Acquisition Corporation or whatever, where they formed these companies to buy companies to then take those companies public. They said it was a way easier way of going public than the traditional way, which it was, because it bypassed basically all the regulation and everything involved with it. Well, everybody was on board, man. Investors pouring billions and billions and billions of dollars into this. Of course, on this show, you guys know me, a Charlie conservative here. I'm telling you guys, don't get near this. Stay away from it. These new things are always a little bit sketchy. Let's see where it goes. Well, now the jury's in. SPAC investors sitting on losses over $100 billion. And of course, the rich get richer. insiders, the guys who were selling the shares to these poor people, rich people, man. Tom Gores, owner of the Pistons, big investor. Richard Branson, all those, the typical guys, right? The hedge fund guys, the private equity guys. $22 billion selling shares. $22 billion. So the schmuckatellis, us, we get to lose $100 billion. The rich overlords, they get to make $22 billion of that. I guess the rest is business expenses. So anyway, SPAC's a disaster. All it does is fortify what I've been telling you guys all along. Play it safe. Be cautious. Better a smaller gain than a loss or a total loss like these poor people are having. Be cautious, guys. There's a lot of ways to get separated from your money. And if we're going to do that, we want it to be for a reason we want, not losses on speculative bullshit like these SPACs. All right, let's talk about banks. We all know there's banking troubles. We know that their assets are depressed in value with rates going up and likely to continue going up, staying higher for longer. Banks sitting on treasuries with really, really low yields. So their backstops shrinking. Bankers still trying to figure out how to shore it up. The Fed involved. Now the FDIC comes out today and says that total bank deposits shrank 2.5% in the first quarter. Now, when I say deposits, I'm not talking about people putting money in. I'm talking about the amount of money banks have. The deposits in the bank. So bankers shrinking. The assets they're holding shrinking. First quarter was not a good quarter for banks, obviously. Largest drop ever recorded. They've been recording this stuff for 39 years. Biggest drop ever. Funds from banks that were in excess of the 250,000 FDIC limit really flying out, falling 8.2%. So people that have excess funds in these banks pulling money out, not wanting to be above the FDIC limit, spreading that money around. But here's the thing they're not talking about, guys. The big banks, the big ones, Wells Fargo, Bank of America, JP Morgan Chase, the rest of them don't want to pay interest, man. They don't want to reward the people who are their depositors. So if you look at them compared to a lot of online banks, or even Apple, kicking it, right? The rates they're offering on savings accounts and money markets suck. So people pulling their money out, putting it where they're going to get better yield, still the same FDIC insurance. It's because it says Wells Fargo doesn't make it really any safer, right? So cheap bankers taking it in the shorts for their cheapness. Good for them. All right, so today we get the jobs, right? Jobs numbers coming. We know tomorrow is going to be the new jobless claims. But today the report comes out about job openings, and man, oh man, the job market's still hot, guys. Job openings increased by 358,000 jobs in April, 1.8 jobs for every person looking for one, up from 1.7 last month. 10.1 million total job openings in the U.S. And this is across the board stuff. It's not like, that's the first thing I always look at. What are these jobs? Is it burger flipper? We need 10 million burger flippers? No. This is across the board, guys. Retail, healthcare, transportation, warehousing, construction, pretty much every line of work hiring, except, of course, the Silicon Valley guys. The tech companies are shrinking pretty good, but the rest of the economy seems to be going okay as far as jobs. Of course, the Fed likes it around 1.2 jobs for everybody looking for one. That puts way less pressure on wages. So the job market's still hot. So now the question comes again with the data we get today. Okay, job market's still hot. Wages rising. You got the bankers in trouble, which is going to offset that. We know that consumers are still spending. Inflation's still hot. So what's the Fed to do? They have their open market committee meeting June 13 and 14. We're going to follow every bit of that for you guys like we always do. But I think that now the market has pretty much decided the Fed's going to hike again. I still kind of feel like they want to pause, and I believe they're going to try to, depending on the data that comes. crazy stuff, though. The Fed really now getting in between, they're in a tough spot because they can continue to raise rates, fight inflation, which is their number one mandate. But, you know, with the jobs as hot as they are, the economy's still rolling, companies still making money, man. I think it just makes it a lot harder for the Fed to pause with conditions still being what they are on the inflationary front. I don't think they really want to break this economy, but I think they're going to have to get to where they want to get as far as their 2% target or even close to it. And before I go today, guys, just a quick thing. You know me, I have to rant every once in a while a little bit, and I got to say, you guys seen this? However, now you know when you check out anywhere, everything's automated. And as you're checking out, you know, it's okay, here, enter your card, touch your card to it, whatever, boom, 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 you're checking out. Everybody asking for tips now. What is this new phenomenon? I understand you got a waitress, you know, you're at a restaurant, you're at a bar, or a guy carries your bag for you, or, you know, the valet parker runs and gets your car. I understand you tip for that. You order a pizza, you go pick it up, now they want a tip for that? You're checking out at Walmart, really? They fire the cashier, but somebody still needs to get tips? This phenomenon, I think, has gone now to its logical extreme. You know, these cheap-ass business owners don't want to pay people real wages. So rather than pay the wages themselves, they come up with different ways of avoiding the money. They want to pay higher wages, they just don't want to pay those wages themselves. So now that by going to you for tips for everything, man, even picking up your friggin' dry cleaning, really? Come on, man. Everything can't be tippable now. This is just a ridiculous ploy. Business owners using this ploy to not have to pay more wages. Look, we're going to get tips now. Yay. If I'm working in a dry cleaning store, and instead of getting $15 an hour, they want to pay me $10 an hour. They're going to give me tips. I seriously doubt I'm going to get $40 a day in tips. Anyway, guys, that's it for the day. Short day today. Tomorrow will be a fascinating day. We'll start the party with a lot of data coming tomorrow. We'll be here to bring you the news you need to splice it up and kind of give you guys a direction. The stuff we've been saying all along still goes, though, guys. Stash as much of your money as you can. A piece of all of your income should get put away. No matter how small it is, put something away. Start saving. Start living within your means. Invest your money conservatively. Better a smaller gain, but a gain than a loss, right? You know, try to not add on any additional debt if you can. If you have debt, try to do what you can, a little at a time, even if it's an extra $10, pay your debt down. Try to get on top of that stuff. The basic conservative principles that we've been trying to teach on this show would help you avoid so much of this terrible stuff we talk about every day. You know, if you're listening to us, you're not, how much did I lose in SPACs? I'll tell you how much. $0. Because as soon as I heard about it, I told Jordan, the young realtor I share my office with, that this was not going to end well. All of these things are devised to separate you from your money. Don't let them do it. Anyway, guys, that's it for the day. We'll be back tomorrow, wrapping up. Interesting day. We'll see where the jobless claims come, and plus some other data that's going to be interesting. Bring you the news you need. Until tomorrow then, guys, take care. Thanks.